Good morning, everybody. This is the live market open for Monday. Happy Monday. It's April 4th. I'm Yohay, Elam, a Forex Crunch and Market Movers podcast, doing the show as usual for FX Trade. As usual, like every morning, looking forward to your questions. And in addition, of course, we'll talk about recent developments in markets, the non-farm payrolls in this case, and some weekend news. We'll go over various charts and levels. We'll talk about the next 24 hours, which are dotted with quite a few events. And if you cannot see the chat box alongside the screen, please go to the address that appears right here, tlk.io/fx3-live-video. Okay, so what's going on currently in markets? Well, we have a slight risk-off mood. That means that the yen is strengthening, first and foremost, despite perhaps talk about more Bank of Japan stimulus. Doesn't happen, doesn't really affect markets, this kind of talk at the moment. And slightly stronger dollar. Commodity currencies are losing ground more than others. We had a report that oil prices, that shorts on oil have become positive. That means it's negative for oil. Once again, that Russia is pumping at the highest levels ever, and also that other countries, this production freeze is not really going to happen anytime soon. We have a meeting there in 2 weeks. So it's related to oil prices, but also other news. We had a leak from WikiLeaks showing that the IMF wants to push Greece quite hard on pensions and perhaps trigger a credit event. And this, of course, made the IMF quite angry that the figures were, that the private conversations between the IMF members are leaked, and the Greek government is, of course, angry that the IMF wants to push it hard. Anyway, it's complicated because the European Commission is softer on Greece regarding pensions. The IMF is harder, but on the other hand, the IMF wants that relief. So Greece basically has to pick its poison. So Greece is back in the headlines. This uncertainty is weighing. More uncertainty comes from the British referendum, as usual, and specifically in the UK, there's now a crisis about Tata Steel, the Indian-owned company that owns a lot of UK steel factories, wants to shut down or wants to sell off, and that's, of course, a big crisis. We had the weak current account deficit as well, and we had yesterday evening a huge leak from a company called Mossack Fonseca in Panama, spilling the beans on the rich and the famous. There was a big focus on Vladimir Putin, Russia's president, showing how he managed to launder some money, to siphon it onto money from Russia to his own accounts, offshore accounts, but also other famous people like football star Lionel Messi, who had unfortunately an unfortunate night on Saturday. Barca lost the Clásico against Real Madrid. Anyway, we want to say it also involves many politicians, and it's not the end of the story. We had only the first leak yesterday. We'll have more reports on this in the upcoming days. It's a collaboration of around 100 newspapers, so it's quite, I think we'll have more impact on markets. So far, it's only news, gossip, but not moving markets. But I'm sure we'll have more stuff, because if governments will fall on these leaks, if we find more corrupt politicians, evidence of there are many corrupt politicians out there, I think we'll have more action. Anyway, enough talk about weekend events. Let's look at the charts, and then let's look at the charts and then the non-farm payrolls. So, as I said, risk-off mood, slightly weaker. Euro dollar, not the best currency to move on risk-off. It's mostly dollar yen moving to the downside, and commodity currencies losing ground. Anyway, we had this reaction to the non-farm payrolls. You know what? Let's talk about the non-farm payrolls and then get back to this chart. So, non-farm payrolls on Friday, the big event, the king of Forex indicators came out a bit better than expected. 215,000 jobs were created. Wages came out better than expected, 0.3 month over month. and 2.3 year over year, both 0.1% better than expected, but it does, of course, make a difference. The unemployment rate went up to 5%, so that might be bad political news for Obama, but in terms of markets, we know that it goes hand in hand with the participation rate, so it's up to 63, continues advancing. These figures show that with the improvement in the labor market, more people are joining in, okay? So now they're counted as part of the workforce. So we have 63% participation instead of 62.9 last month and 62.4 a few months ago. So it's basically good news. For wages, it means that when we have more people participating in the workforce, there's a lower chance that wages go up. Okay, bon dia, Sinatra. Good morning, Luca and Jake and everybody. Anyway, there were hardly any revisions. Basically, bottom line is slightly better than expected on both wages and both headline. The reaction was a recovery for the US dollar, recovery opportunity. But now let's look at the charts and see that this was a bit limited, okay? So all this roller coaster here, this rise, well, that was a bit before the event, yeah, and then the market was front-running a poor report. This didn't happen. I mean, we had euro-dollar rise almost to 114.40, and then we fell all the way to under 113.40, so more than 100 pip range around this NFP, okay? And then we stabilized basically back in the previous range. We talked about last week on Friday. So it's 113.65 to 114.10. Okay, we've seen this 114.10 line work before the NFP last week and afterwards. All in all, last week it was a terrible week for the US dollar because of Yellen. She repeated her extreme dovishness from the rate decision, okay, she talked about extreme dovishness from the rate decision, and talked about uncertainty regarding inflation, worries about the global economy. What else did she say? That caution is especially warranted. That was the big story of last week. That was the big crash of the US dollar. The non-farm payrolls, you can see this in euro dollar. You can see it went all the way up from the previous range of 112.15, more or less, all the way to much higher ground. We had the same story with other currencies. The non-farm payrolls report, which came out a bit better than expected, helped just a bit, at least stopped the bleeding, okay? But after this roller coaster, things stopped. Now, you can see a similar pattern. Well, with the pound was hit hard by, there's a new Brexit poll. Okay, well, that's exactly when I'm beginning to talk about the pound. So, of course, this is relevant. It's from Saturday. See, the out campaign, and that's worrying, of course, for the pound. It leads by 4 percentage points ahead of Britain's EU referendum. Okay, let's share this with you here. Article by Reuters, and they're quoting the Observer, right? 43% against 39%. So many people are undecided. It's an opinion poll made for the Observer newspaper. Margin of error, I don't see it. Anyway, 18% undecided. That means 18% uncertainty, if you wish. So thanks for that, Luca. Of course, a lead for the out campaign. The crisis in Tata Steel, and the British government doesn't really know what to do about that, okay? Conservative government is not ruling out nationalization of the steel industry, okay? The current account deficit last week, which continues echoing in the British press, we had lots of reports about how this shows that the United Kingdom is in a dire situation, living beyond our means, were some of the headlines. Anyway, so the British pound was hit a bit harder did wobble around the US non-farm payrolls, but anyway, it fell back to lower ground. I said last week it rose mostly on the weakness of the US dollar, and now it's back down 142.15, back to the lower range of 141.75 to 142.40. Okay, higher resistance 142.80, lower support 141.25. Dollar yen, when we talk about risk off, we talk about dollar yen falling. Okay, so we fell once again under 112. The line before that was 112.20, but it was sort of traded through so many times that I moved it to 112, which is also a round number. The low for today, 111.32. The line in the sand, I still see it at 111. We did have a breach here and perhaps an intervention in mid-March, but beforehand, you can see how 111 worked nicely. So I see the range now for dollar yen as being between those two round numbers of 111 and 112. Further resistance 112.80, 113.10. And if we do break under 111 without a Bank of Japan intervention, I guess the road is open for 110, an even round number. Okay. Dollar CAD, we can see the Canadian dollar losing a lot of ground this morning. The new session again, once again, we've seen this rise here. We actually did get good news from Canada last week. We did learn that the economy grew double the expectations in the first quarter. Okay, in January, the first month of the first quarter, 0.6 instead of 0.3. On the other hand, oil prices are falling, and this is, of course, bad news. We do have a jobs report in Canada on Friday, and it's an isolated event without any significant US figures released at the same time, so we could have a full reaction. Okay, anyway, the range currently between 130, the round number, and 130.80. Further resistance 131.70. Support 129.30. Let's jump to oil and show you. This is the story of the day. Also last week. So we had, we've seen already last week that we had better than expected inventories, a smaller than expected rise in oil prices. Okay. And that helped a small recovery in oil, but it didn't last too long. So that was an ominous sign for oil prices. What's going on with oil? I think I mentioned this at the beginning, but let's talk about it quickly. A few things. First of all, we have a report by the Federal Reserve talking about how resilient the shale oil industry is. The number of rigs did fall, but their efficiency is on the rise. That the cost has fallen for producing oil in the United States. That also they're showing, of course, a lot of flexibility. Production eventually did tick down just a bit, but not too far. And of course, technology is responsible for a lot of this resilience. It's cheaper and more efficient drilling methods. So that's one reason. This report from the Federal Reserve. Secondly, we had a report that Russia reached record levels in pumping oil despite the low oil prices. Also, Russia is not cutting production. We also learned that, well, nothing new. We know that Iran does not want to cut. And we also saw over the weekend that shorts on oil became positive. That means that's negative for oil. So we have sort of all the dark clouds gathering around the black gold. And this, of course, pushes the price lower. We have the April 17th OPEC, non-OPEC meeting. Nothing is expected there. Anyway, currently we're hovering around above $36, $36.30. We lost a lot of ground. This is, of course, WTI crude oil. Brent oil is at similar levels. So I would say 37.60, some kind of resistance here. Let's go back to currencies. We talked about the Canadian dollar. Australian dollar also losing a lot of ground this morning. A bit of choppiness there. We've seen it reach new highs at 77.25 last week when the US dollar was collapsing. And despite better than expected Chinese figures, Aussie dollar is sliding. Okay, so we're at we lost the 76.40 line I mentioned, and the next line here is 76.50. followed by 75.33. Kiwi dollar was a star last week, also here losing ground, but still holding on. 69.80 was the high reached twice, and 68. Oh, this line is not so strong. 68.80. Next support is 68.20, followed by 67. Okay. Dollar Swiss moving a bit up. I mean, stabilizing after the big fall. This is, of course, the NFP wobble. This rise and fall here. 95.88 is the current level. I would say resistance still at 96.40, and the low line here. 95.40 works. 95.50 works as support. Euro Swiss very stable at the 109 level, 109 handle. Nothing changes. Euro pound. Here we can see already a nice cross. We are trading above a very round level of 80. If you do it the other way around, it's 125 on pound euro. Anyway, this is of course a significant psychological line. This reflects worries about Brexit and all the other UK troubles we mentioned. And the euro, it has its own troubles, but of course the euro will also suffer if Britain leaves. But against one another, the sort of the dirtier shirt here is the British pound. Let's put in line above this high. Let's see if really break even to higher ground. Anyway, we are at the highest levels on euro pound since maybe this line is less relevant. Anyway, next resistance 80.40, followed only by 81.60. Okay, which was already very strong line work to support. So we're at the highest levels since November of 2014. So it's nearly a year and a half highs for euro pound because of everything that's going on in the UK mostly. That reflects greater weakness of the pound in comparison to the euro. Okay, euro yen continuing. No, it's more or less stable, falling down a bit now. We're seeing this first scuff movement supporting the Japanese yen. So we're off the highs, turning back down. Ranges are not huge here. We should update the lines also here. 128.20, currently just under 127. Support 125.50 would be better support. And yeah, perhaps we have some kind of support here at 126.60. Pound yen, quite a roller coaster. It behaved very nicely with technical lines. We had a trade in here between 158.50 and 160. Made a break, made attempts to break above 162.20. Perhaps you should update it to 162.50 even, but then fell down. Now losing the 158.50 line. The next support line is only at 156.10. Risk off. No demand for the risk pound. High demand for the yen. Okay, so this is the roundup of the regular charts we cover each morning. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Oh, with oil, it's 12 charts. Your questions about any of these charts, any other currency pairs, crosses, are, of course, welcome. Continue. Well, this is also something I like to show. Chances for rate hike or well, before Yellen spoke, they were about 40%. They fell as low as 20%. Now they're a bit higher after the non-farm payrolls, 25%. I'm talking, of course, about June 15th. Not the next meeting, but the one afterwards. We have a meeting in April, and the chances of rate hike are quite low. Okay, so 95% against a rate hike in April. That comes at the end of the month. No press conference. You see here a question about gold. Here we are with gold prices. 12.17 at the moment. I would say 12.24 is a great separator of ranges, and 12.05. So we see quite nice technical behavior here, with 12.24 working as support right here, support here, support here. 12.05 worked to support late in March. Okay. And it's the next line of support. Gold lost its shine, as they say. After reaching 1280, it couldn't continue higher. It rose very nicely at the beginning of the year when we had all this risk-off sentiment, I mean the extreme type, that helped. We had the impression that central banks would continue pumping. More money would go to gold because of too much money floating around, and in particular, too much money going in the wrong, going to something safe, but speculation has lost some of its steam. If we lose 12.05, the next line is 11.80. Okay, hope that answers your question. Continue. Okay, we talked about the non-farm payrolls. Let's talk about other events we had on Friday. Okay, we had the ISM manufacturing PMI. That came out a bit better than expected. What it did show, on the other hand, that employment remains weak, remains in contraction territory. But actually, we already knew that because 90 minutes beforehand, we got the non-farm payrolls report, and it showed a big loss of manufacturing jobs, so it didn't have an impact. We do have the ISM non-manufacturing PMI on Tuesday, tomorrow, and that's already an event that stands on its own because the services sector is bigger than manufacturing, and it has enough space of its own far from the NFP. We usually get the ISM manufacturing and non-manufacturing PMIs before the non-farm payrolls, and that gives us more, gives us a hint towards the NFP. This time, we get it afterwards. Okay. In addition, we had, well, the final read from the University of Michigan regarding consumer sentiment. That was revised to the upside. A little bit more of good news. All in all, Friday was a good day for US indicators, but it helped the dollar, mostly helps the dollar today, and just a bit. The week began with some figures from Australia. We had building approvals beat expectations, right? But on the other hand, retail sales missing expectations. Here we have the FX read calendar on Forex Crunch. Yeah, sorry, something got me distracted. Anyway, building permits came out at 3.1% for the month of February. That's good news for the housing sector, better than 2% expected, but consumers are not buying enough. Flat retail sales report in Australia instead of 0.4 expected. Just as the show began, we got a positive report from Spain. A big drop in the number of the unemployed. Okay, almost 60,000 people got back to work or are not registered as unemployed. Expectation was for a rise of 21.3. I think it has something to do with the beginning of the tourism season. Anyway, it's better than expected. I don't see it having an impact on the euro. Remember, Spain is the fourth largest economy in the Eurozone. We have German figures, French and Italian having usually a bit more impact. Later today, we have quite a few events. Okay, so we have at 10:30, we have figures from both the Eurozone and the UK. We have the construction PMI at half past 8 GMT, 9:30 in the UK, and 10:30 here in Central European time. It's expected to stay more or less the same, drop from 54.2 to 54. On Friday, we had the manufacturing PMI from the UK. It missed just a bit. It wasn't a big disaster. We know that manufacturing is poor. Now, with the Tata Steel crisis, it looks even worse. Anyway, construction PMI is always has been always the leading one, the best one. At the same time, we have the Centix investor confidence, sort of another business survey, not the most important one, but still worth noting. Last time disappointed with 5.5, and this time it's expected to rise to 6.4. More importantly, in the Eurozone, the unemployment rate. In recent months, it surprised many times to the upside, okay? So we had it rise to, all the way to 12.2 and then gradually fall. We had positive surprises. Now it's expected to remain at 10.3. At the same time, we also have the producer price index, and we know that inflation in the Eurozone is quite poor, so it's expected to fall 4%. Okay. And we have, in the United States, I would say second-tier figure. For Germany, it's a bit more important, but in the US, it's not that important. We have the monthly factory orders. Last time we had it rise 1.6. As you can see from the chart here, it's quite a choppy event. It's quite a choppy release. This time a fall of 1.6 is expected. For those of you trading the Canadian dollar, we have a speech at 2 GMT at the same time from the Bank of Canada's Governor Stephen Pelosi. Okay, let's see if he's positive on the Canadian economy or not. I think that with the government providing a stimulus budget, the Bank of Canada is not expected to cut rates anytime soon. We also have a business survey from the Bank of Canada, and then some figures from Australia. But I want to focus on the figures for tomorrow from Australia, which are more important. So we have the trade balance at midnight GMT. Hope the time here is correct. Yeah. And we're expecting a deficit there. And more importantly, there is a rate decision in Australia at 4:30 GMT. Okay. As you can see here, no change is expected. Let's look at the Aussie dollar. Perhaps the most important event of the next 24 hours, but no big change is expected. The Aussie dollar is a bit weaker than it used to be. It had a nice rally last week, rising on Yelen's comments, and now it's sliding back down because of this risk-off sentiment related to oil, related to profit-taking. Anyway, what can we expect or not expect from the Reserve Bank of Australia? Okay, so Australian economy in general is looking like it's two-speed recovery or two-speed economy. We have on one hand the mining sector, which is slowing down because there's less demand for iron ore, copper, all the great metals that Australia extracts from the ground. That's because of the slowdown in China. On the other hand, we have also from China, but also demand for other Australian consumer goods, Australian housing, which is attracting Asian buyers, but also local demand. So we have a strong local economy and a not so strong Chinese demand, which was the driver of the Australian economy for many, many years. Okay, the Reserve Bank of Australia is in general happy with the current situation, of the economy. But on the other hand, since its last meeting, the Australian dollar did rise a bit. So I do expect the Reserve Bank of Australia to jawbone a bit more about the strength of the Australian dollar, and it can come at a good timing. It's a good timing because the Australian dollar already reached a high level and has begun its descent. So it's easier to hit the currency when it's down. To say that something like Australian dollar is a bit strong in comparison to commodity prices, the Australian dollar is not helping the local economy. It probably won't be a big statement, but I believe they will show their dissatisfaction that the Aussie dollar is a bit higher. They would like it more around 70 and not at current levels at 76.10 or 75 even. So I'm sure that's what I expected. It'll come at 4:30 GMT. That means, well, quite early. It's still during the Asian session. We'll talk about that, of course, tomorrow morning. I believe we will see an impact on the Australian dollar. So small impact from the trade balance release because the focus is on the RBA decision. Okay, I see here I missed a comment. The next new best safe haven is my FX account. Yeah. Okay. Oh, shows the money. Anyway, here we are. Current situation. What's your opinion on the huge spike in bounce with 100% retracement, stop and reverse that happened in euro dollar during the NFP? Well, during the non-farm payrolls, it's a mess. It's always very low liquidity or just around the events, and then suddenly, boom, everybody enters the market. So anything related to the non-farm payrolls is, of course, a mess. This is what you're talking about. A rise to the top that actually happened before the NFP. When the dollar was weakening, markets had expected a weaker outcome and a big fall, then stabilizing once again. So this is really classic non-farm payrolls. We had a certain level before the release, then we had a mess, up all the way, down all the way, and back to the previous range. And that reflects what happens in fundamentals, because the report was slightly better than expected, and the outcome in euro-dollar is that euro-dollar is slightly weaker than in the European session, leading towards the event. Okay, so eventually fundamentals do set the tone. The mess around the non-farm payrolls still considered the most important release to Forex markets. Okay, so this was quite a mess. Okay, yeah, perhaps there was some stop hunting over there. Yeah. Is the God Save the Queen trade setting up? Break of triangle and, well, I don't know. It's called the God Save the Queen. Anyway, thanks for sharing the chart. Yeah, 140.50 is a very strong line, as you show, and I showed also on the charts. It worked to support 1, 2, 3 times. Okay, and now I see that there's also a triangle here. So yeah, if we fall under the next level of this triangle, which is above 140.50, we could crash all the way down, according to this technical analysis. I'll add that with all the trouble we're seeing in the UK, and now with all the trouble, well, now that the US dollar is not that weak like it used to be just last week, we could see pound dollar extend its falls. Well, as we speak, it's already a bit lower, but still a way to go. Currently 142, 141.75, and 141.25 are the next small lines of support, but 140.50, of course, is much stronger support. I would put more emphasis technically on the 140.50 line than on this triangle you showed. Okay, but in general the trend is bearish. Lots of trouble in the UK at the moment, lots of uncertainty, especially about the referendum, troubles in the British government, crisis in the Conservative Party, Tata Steel, big current account deficit, you name it. Okay, so it is quite a mess over there. I read sometimes that cable is sensitive to oil, but I never understand why do you. Okay. Well, it's not only the pound. It's in the past 6 months or so, we're seeing in many cases a good correlation between oil prices and currencies, okay, and stocks as well. When oil prices are rising, in old days, it used to be bad news for the global economy because this would leave less money in consumers' pockets and squeeze the economy. And when we had falling oil prices, that was sort of a shot in the arm motivation for the global economy. Apart from those very small, very specific list of oil-producing countries. But now it's seen more of a question of global growth of demand, not only as supply, although it's also, of course, mostly supply related. So when oil prices go up, Canadian dollar goes up, of course. Australian dollar goes up. We're seeing also other commodities rising with oil. Okay, but we've also seen the pound joining this commodity currency camp as, okay, things are doing well. Let's take risk and buy the pound. Let's sell the more safe yen. Of course, the yen is the number one safe haven. And also the dollar and the euro used to be, now it's not so much, as the safe haven currencies. Now, when oil prices are falling, that's bad for the global economy. And we're seeing the pound fall, just undo the previous moves, okay? So I hope that's some kind of explanation. British Petroleum extract huge quantities of oil from the North Sea. Yeah, it's a significant part of UK GDP. I think it's falling as a share of UK GDP, but still worth. Yeah, so Britain is also an oil producer, but if I'm not mistaken, it still has to import a lot of oil for its needs, and there are a lot of mining oil extracting companies based in or trading in the London Stock Exchange. Okay, so this also has an impact. I mean, the negative side of oil has, well, it's not only a question of market mood, but also of these specific stocks. And as Fabian mentioned, the North Sea. Okay. Any more questions? Let's see. Haven't missed anything. Yeah, events today. Yeah, we talked about. Oh, I have the wrong time here. Okay, let's just do a quick overview of what's coming up next ahead in the week. Today we have quite a few events. Nothing that really stands out. The NFP echoes the weekend news. Tomorrow, well, early in the morning, the Australian rate decision. The UK services PMI, the most important one, the biggest sector. Perhaps this could be the make or break moment for the pound, and giving the last trigger for downfall. Maybe it'll happen earlier. Of course, maybe it will not happen at all. The services number also in the United States, big release also there. Also, in general, in developed economies, we have services overtowering manufacturing. And Wednesday, the Fed meeting minutes, perhaps a bit stale, but still revised until the last moment. And on Friday, the Canadian jobs report. Okay, that's what's expecting us later on in the week. I believe that during the week we will also have more impact from the what we're having in. Sorry for that noise. What we're having in the echoes from this Panama Papers, as it's called. Okay, and anyway, currently, yeah. Okay. So let's reach the wrap up for today. This is the wrap up for the live market open for Monday. Happy Monday. It's April 4th. We have a slight risk off mood in markets. That means, first and foremost, the Japanese yen is stronger, commodity currencies are weaker. We're also seeing weakness in the pound against the US dollar and in the euro. For the pound, we have many events weighing on the pound. We have Tata Steel crisis in the UK, a poll showing higher chances over Brexit, current account deficit that has been talked about a lot despite the upgrade in GDP. So the pound is sort of undoing the gains it made, cable made on the weak US dollar last week on Yelen's dovish speech. So 142.04 is the current level, 141.75 to 142.40 is the range. Let's go back to euro dollar. Euro dollar wobbled a lot, of course, rising a lot last week on Yellen, even making it to even higher ground, almost 114.40. Then with the better than expected non-farm payrolls report, we'll touch that soon. We got the US dollar fell, then we're stabilizing back in this range. 113.65 to 114.10 is the current range. Dollar CAD oil prices are falling, also contributing to a negative mood in markets. Weaker Canadian dollar, currently in range 130 to 130.80. Higher resistance 131.70, weaker support, lower support 129.30. Lots of negative reports on oil prices. Russia is pumping at record levels. OPEC and non-OPEC countries are not getting any closer to some kind of deal. Oil shorts are on the rise, and I guess there was some other news. Well, the U.S. shale industry is very resilient. Also, of course, according to a report by the Federal Reserve. So Aussie dollar, alongside other commodity currencies, mixed data from Australia this morning, building approvals and retail sales offsetting each other, but the risk-off sentiment is sending Aussie to the 76 to 76.40 range after it already touched 77.40 last week, and lower support 75.33. And the Kiwi dollar, one of the stars last week, fell from the highs of twice the highs of 69.80, and now we're at the range between 68.20 to 68.80. The big event that we had last week to close the week, of course, was the non-farm payrolls. All in all, a slight beat on expectations, 215,000 jobs created. Wages are up 0.3 and 2.3, both 0.1 better than expected. So small beats on jobs and headline. Other figures were sort of okay. Higher unemployment with higher participation, which is generally good news, not bad news. Hardly any revisions. In addition, worth noting, the manufacturing PMI in the US also a small beat. Consumer sentiment is a bit higher. Today on the agenda, we had the Spanish unemployment change coming out much, much better than expected. So I'm personally happy to hear that. I live here in Spain. So far, no effect on the euro. We have in the Eurozone Centix business sentiment, which is on low ground and is expected to recover. And afterwards, we have the Eurozone unemployment rate, which surprised expectations, beat expectations several times. Let's see if it happens once again. 10.3 is the current level. In between, we have the UK construction PMI, which construction sector has been always the leading one, but it's not the most important one. The most important one is services, and that's tomorrow. We have factory orders in the United States at 2 GMT. A fall is expected. Expectations for manufacturing all over the developed world are quite low. So anyway, it's not as important as the NFP and tomorrow's ISM non-manufacturing PMI. During the night, we have figures from Australia, the trade balance, and more importantly, the RBA decision. No change is expected. An interest rate of 2% is expected to be maintained. But the RBA has seen the Australian dollar rise since its last meeting. This isn't good news. For them, they might try to talk the Aussie down. So be warned, especially when it's already weaker. It's easier to hit the currency when it's down. Okay, so that's it for everything. It's a wrap up for today. It's a new week and no more holidays. It's not a short week like we had last time. And it is a full week. Yeah, well, I'm sure that these Panama Papers, okay, that we heard that the news broke out last night on 100 different, 100 different outlets all over the world. This will accompany the news and eventually will reach currencies. Tomorrow we also have the U.S. primaries in Wisconsin. Probably, well, only one state and not such a big one, but with tension rising towards the outcome of these primaries, U.S. politics, I believe, will have a bigger impact. Okay, so that's it for today. Thank you very much, everybody, for coming. I wish everybody a safe and successful and responsible day in markets. And I'll see you all tomorrow. So thank you and bye-bye.